She calls me Dr. Kent. So
Good afternoon. We're here this evening with Kent Sims from Aetna Insurance Company, and he has been one of the reigning premier agents here in the Los Angeles area that sells a multitude of different types of insurances. But our topic today is creating wealth in the minority community. And we, for a long time, have been aware that some of the minority community men choose not to purchase insurance for a myriad of reasons. And we want to explore some of those reasons. We want to look at how they identify insurance in their mind, what it is to them, and to maybe do some fundamental changes in how they see, purchase, and can further utilize this purchase even for retirement purposes. Mr. Kent, could you help us explore what you think some of the deeper issues are in the purchase of insurance to secure one's family with men?
yeah, based on my experience, I'd almost like to equate purchasing life insurance for men, particularly men of color. It's an emotional purchase because it almost is a defining moment of their relationship, because this is an opportunity for you to leave a legacy for your family, your loved ones, your children, so that the next generation can do better. And if there's a spouse, she can maintain the house payments, mortgages, and pay bills, and still have a little bit of peace of mind. And maybe there's a economic cushion, so to speak. So I find it as an emotional purchase. What I find with a lot of men is that it's a defining moment of their relationship. A lot of men that I've worked with and spoken to and interviewed with don't really have a mindset to leave the next generation in better state financially. Cost is a factor. That's probably the number one factor why men procrastinate. Because if some of my clients who are on fixed income, SSI, Social Security, disability, that's not a big income. And so if you're purchasing life insurance and you happen to be 63, 64 years old, and this is your first attempt at purchasing some life insurance, the cost can be astronomical for a person on a fixed income. And for example, if I have a client that maybe earns $1,000 a month through their Social Security, and I'm asking for upwards of 120, 150 to $200 a month for a life insurance policy, depending on the size of the death benefit, that in itself could be a challenge. It just seems like they're not interested in freeing up any discretionary income in order to address the concerns of life insurance and leave the next generation in place. I've even heard people being facetious and say, well, I don't care what they do with me, they can throw me in the backyard. And we know that can't happen, because backyards would be full of corpses, and that's just not a good look anyway. And so economics plays a really important role emotionally for men. It's a defining moment in a relationship. If they have some reservations or some concerns about how they truly feel about their spouse, because I personally feel if I love my wife and she's been a great partner, I'm going to make sure. I think it's just my responsibility, just because I want to leave my family in a better situation financially if I'm no longer there. So they've got to replace the income for that household just so they can maintain their lifestyle.
Okay, so if I get your key points that you pointed out, that you feel insurance is an emotional decision, it's an economic decision. People don't have the mindset to do it because of the cost factor and them being on a fixed income or disability, that some of these men just find it very difficult to make the payment. It's a challenge, it's discretionary. We know people have discretionary income. And I think that's a key factor right there, in that when you have, what do you do with your discretionary income? So we're going to further explore that a little later in the program. But the defining moment really hits home because when you think about your legacy, defining moment to me means legacy.
Correct.
And what you're leaving to your children, whether you leave anything to the spouse or not, um, really says who you are and what you thought of your kids, and
Correct.
where you see them going in the future, just to give them a leg up, so to speak. Whether or not you love the wife or you hated the wife, how do you feel about that? Should that define how you spend your money in the end and what you leave to the family? I think this is a big topic that needs to be addressed, because we're finding that people who leave on a bitter note in these relationships oftentimes go off and take care of other women's children and see that they're happy and flourish, while leaving their own children, blood children, with nothing. Where do you
Right.
see that?
It's an individual choice. Like I said, to me, I see it as more of a defining moment as reflective of the relationship, functional or dysfunctional, happy, cohesive, or bitter and angry. And there are a lot of folks out there. I've been doing this 9 years exactly. I would say that 90% of my client business, and it exceeds several hundred or more. I think men make up maybe 10% of that portfolio. 10%. That's pretty sad, because I have well over 300 clients. And that's pretty sad, but it also tells you how serious women take, death. They want to prepare for it. They want to plan for it. They don't want to see themselves out there being humiliated and disgraced and bringing shame to the family name. And they just take care of business, men, sometimes. And a lot of it has to do with the social economics of the individuals. Working class, and that may play a factor, because they just cannot find discretionary income, because there are other priorities that have more precedent than taking care of life insurance. It doesn't seem to give anybody any immediate joy or benefit or gratification. It's something that is there for somebody else when the event of my passing.
How do you see, or what type of product do you see being most beneficial that the male figure, say when the children are young, could establish that would fit his cost budget?
Well, the best way to leave a legacy, if we're going to use insurance as the instrument for legacy building or legacy preservation, is a product called the IUL, Index Universal Life. It has a components of cash accumulation, and it imitates the stock market. So it has the ability to create another revenue stream for the family long term. Also, we never have to buy another policy, because it will also buy or purchase more insurance without having to qualify medically. So it's really the perfect product for younger people. So that's one way that parents can leave legacy for their children. You got to set that generation up so that they have $1 million policies, cash accumulation. And when they have children, those children are set, because that legacy is in place. And so you teach the next generation. And a lot of it has to do with education too. A lot of times in the Black community, I can recall my mom having life insurance on us with United Insurance or American General, and they used to come by the house. Well, those are small policies. And some of those people still have smaller policies. I have a client, he has like 7 different policies. They are all small, 2,000, 2,500. And I said, you'd have been better served just to buy one larger policy. It worked out, but he bought them at different companies, different agents at different stages, and they all total about $17,000. And that's a lot of policies for a small amount of money. But that's what he saw himself doing, because the cost of a funeral in 1970, you could be buried with a full service in a funeral, a grave funeral, was about $1,000. My mother had $2,000 policy on us. It was like $1.46 a week. She bought the policies when we were like babies, literally. So she was able to set it up. So again, it has to do with planning, just planning and education. I think that men need to be educated, or everyone needs to be educated about life insurance, because it's changed. They have something that I like to call the IUL. I call it a smart policy, because it has a number of benefits that the person paying for the policy and the applicant of the policy can have living benefits, and that's huge. So it's no longer the old way where nobody gets anything until someone passes away. Now you have smart policies that offer you liquidity, tax exempt revenue or another revenue stream, and high death benefits and living benefits. That's huge right now. So my focus going into 2021 is I'm working more with parents or grandparents who have young children who want to leave legacy. Whatever they have, it's kind of too late, but if they want to leave that to children or grandchildren, that's fine. But it's kind of late for them to be purchasing large policies because they're at an age where it's not very friendly on the budget. Everybody north of 60 is several $100s, as much as 150 and up, depending on the death benefit again. I have a gentleman. Go ahead.
Sorry, where do you see term coming into play here if they can't afford the IUL?
Great product. It just provides a simple death protection at the lowest possible cost. That's one single benefit of term. High death benefit, low cost. It can create problems later on in life as we become seniors. There are good companies out there. I have no problem with term. In fact, one of my policies that I have on myself is a term policy. I bought it 30 years ago, and it served its purpose. My daughter is 22 years of age right now, so if anything were to happen to me, there's a sizable amount of money that would go to her that also will get paid out over a 5-year period. Because my daughter loves clothes and stuff, she's not going to get all the money, and I know her well because she'll be on first name basis. So for me, every year you get a certain amount of money till it's all paid out in full.
Okay, what do they call that policy?
I have just a straight term policy, and that's what I'm using it for. So I have the death benefit
I'm talking
structure.
about the payout, the how it's structured to be paid out upon your demise.
You can request that with the company. The company's obligation is to pay a claim when death occurs, and you provide all the documentation. So you can have the money paid out and structured to the beneficiary any way that you choose to. There's no fancy terminology for that. It was just something that I wrote up, had notarized, and sent it into the company, and they put it in the file.
Oh, okay, I see. So it was a special instruction that you wanted.
Yeah,
so
special and specific instruction.
Yeah,
no.
To be given at once, and then it could be, yeah.
No.
Got it.
She'll be on first name basis at the mall.
Okay. Let's see. Does distrust of the system, you think, in any way perpetuate this feeling that policies really don't mean much, or distrust in their own personal relationships?
Absolutely. Well, the system in itself, for sometimes people purchase policies, they don't understand what they're purchasing. I use the term return of premium, simply means that there will not be a death benefit paid out within the first 2 years. And money goes back, 100% of the premiums go back to the family if they don't make it 2 years in 1 day. And so I've ran into people who don't believe in insurance because somebody or family member bought a policy and the company didn't pay out. And so there's a sense of a mistrust in some levels based on someone else's experience or their own family member's experience. I've listened to that a couple times. I said, well, if I had more information, maybe I could help you understand why, but they weren't able to provide me any more information. They just said the insurance company flat out refused to pay them and they gave them the money back.
Well, let's explore that a little bit. So I think what you're saying here is that when they initially signed up and were asked certain questions, they may have not been completely truthful, or maybe they didn't know they had certain conditions. And certain conditions could lead to them not paying the claim because they felt that you were not totally truthful. Is that correct?
Yeah, that's correct. If you're not honest with them and they find medical records and information, because typically insurance companies have a standing right to contest any policy within the first 2 years. They got the legal right to go in, ask you to sign a HIPAA form, request medical records, and from the date of the application, they go back 2 years behind that. So they'll ask you on the question, a typical question, in the last 2 years, have you had any illnesses or chronic conditions that fall into this category, yes or no? If it's no, then they will proceed and issue day one coverage. If it's yes, then they are going to be in a modified or return of premium plan. So health questions dictate what you're eligible for. And I tell people all the time, it is not your right to get insurance. You have to qualify for it medically.
Mhm. And that's something good to know. In other words, good health buys insurance, and age determines cost of the insurance. Would that be a correct statement?
Yeah, absolutely. The factors that determine the cost or pricing of a policy is sex. Men are more expensive to insure than women. Statistically, women outlive men by 8 to 10 years. So there's a risk factor or a risk assessment factor. Insurance companies charge men more. Smoking tobacco also adds to the cost of increased premiums or the price of a policy. And then overall, your health. Overall, are we on a bunch of medications? Have we had heart failure? These are all risk factors that they all take into account. And they come up with a premium based upon what they feel is fair risk assessment based on how you answer medical questions. Tobacco is huge. Anybody over 50 that still smokes tobacco, and I got clients who have COPD, which is lung disease, and some of them still smoke, and they know they shouldn't be smoking.
Correct. That's a major risk factor that leads to all other types of problems. So the smoking, do you think the smoking of marijuana in the future is going to cause a major rise in healthcare costs for men, especially, or both men and women?
I think that's a tough question because they simplify it and just simply say, do you smoke? You know, right. that way you cover everything, whether it's meth or marijuana or tobacco. Do you smoke? And what do you smoke? So those will be a risk factor. Anytime you put smoke into the body, it can harm the lungs tissue and cause and accelerate death.
You hear a big argument about marijuana being natural. It comes from a plant, as opposed to using alcohol and some of the other, substances. Health-wise, can it be detected in the system?
Some companies require parameds. So they may, I got a client I'm setting up a paramed with next Friday, and they're going to come out and swab him, saliva, urine, and blood. We've already had a conversation, and I asked him, he said he doesn't smoke anything. I said, well, they're going to come out and they're going to be looking for drugs and cannabis. I think the exemption or exception will be is that for those that get medical marijuana cards, meaning that you have actually seen a doctor, he has prescribed or validated that you can use cannabis, medical cannabis, for pain relief or some other illnesses. So I think they may have some exceptions there. For people who smoke recreational, just go out and because they're over 21 and show an ID and walk into a dispensary because they want to party and they like that feeling. If they get paramed, it's going to show up. Some companies still frown on that. Some are a little bit more relaxed on it because it's not legal on the federal level yet. It's legal on the state level.
Okay. Just thought we'd go down that rabbit hole for a minute because a lot of people are under the impression that they can smoke because it's a natural herb from the earth, as opposed to too much alcohol might even show up differently in the body. So that's good to know. Who do you blame for the perspective that you don't really need to create wealth or leave anything to anybody? Where do you think that came from? You're like the feeling like you're only here for yourself, and I birthed you. Get out, get on your own, and make your own way. Where did that concept generate from?
No one particular place. I mean, it's reflective of a relationship. If there was a husband and wife and they're not coexisting and it's not a cohesive union, there is a lot of dysfunction and distrust, dishonesty. All of those play a factor in it. It's like, why would I want to leave money to her so she can go out and get a younger man? That has been a reoccurring theme that has been brought up a few times, which I find interesting. I said, well, you're not here. If you care about this person, you would want her to maintain the lifestyle that you guys already have, be comfortable, at least get bills paid, and give her a better head start. I think that's the very least you can do. But if I'm unhappy in the relationship, it may be reflective of me not wanting to take care of any responsibilities. And that's the last burden I get to leave on you. And it's a huge burden because some people feel honored, like you have women of faith who feel like cremation is abomination to the body and burial is Christian-like, and it costs 11 to 12 to $15,000 for basic services to be buried now. It's expensive. Yep, and I always tell family members, I tell men and women, if you don't have that money saved, the next best thing is to get a policy. You kind of finance in death. It's my inside joke, because it's going to get used one day. And the bad news is we don't know what day. But we will go on and buy a new Cadillac, and we can't leave the dealership unless we provide the dealership proof of insurance. The bank has to have proof of insurance.
That's true.
So the human life should be worth more, but a lot of us want to procrastinate. Where I'm seeing this a lot in the inner city, a lot of it has to do with prioritizing finances. We can have a limited income, but we could prioritize finances and we could do something. Like I had a lady who wanted to get $25,000 policy. Medically, she didn't qualify for it, or it didn't fit her budget, more or less. And she was like, well, I'm not going to get anything. I said, well, who does that hurt? You kind of like went against everything that you said you didn't want to do. I said, spend what you can spend, buy what you can afford to pay for that every month. And they're better off with whatever you leave them than with nothing.
Yeah, your logic is not making good sense there. Absolutely. And you're hurting somebody in the end. You know, let's take it a step further. Good, excellent point.
Yeah, sorry. I had a phone
what
call.
Index or belief system do you operate by? In terms of, I think you've already stated that, how you would handle it, so that might not be the best question. How do you think this pandemic has affected, perhaps, how minority communities are looking at life?
It's been a wake-up call, because the abrupt departure of friends, family, co-workers, getting out of here, and maybe not having all their resources in place to deal with this. So I think it's been a wake-up call. For me, I think it's increased my business because people are calling me. And some folks I've talked to maybe a year ago kept my number and called me back, and they're telling me their concerns, like, hey, this thing is out of control, and I'm ready to start my insurance. So for me as an agent and broker, it's been good for business. So I think it's a wake-up call for a lot of people.
Absolutely. I think they see their life flash, but what they say, how you see your life flash before your eyes, and say that could have been me, particularly with the really close ones.
Right. Well, I mean, you're talking about a microscopic airborne pathogen that is contagious, highly contagious, that could lead to death. That in itself is scary. And the fact that we don't know what we're dealing with, there was no information or data about it, made a lot of people concerned and scared. Insurance companies were scrambling because they paid a record amount of money to pay claims last year and in this year. Mostly last year. They paid an exorbitant amount of money in claims because no actuary can account for this. None of them can. So for them to take a financial hit, insurance companies got smarter. They found ways to continue to make it easier for agents to go out and do their jobs. They use technology. So now you have e-apps, you have Zoom presentations, which you see all the time, dual presentations. one-on-one. I could sit at home and look at somebody through a 10-inch screen, an iPad, and talk to them, and they can see me and ask me questions. Sometimes that's good rapport building because they get to see your face. I know you're a big fan of, keep looking at people when you talk to them and sell them things or offer them services. I'm a big fan of that also. I'm still very old school. I still like going out, meeting and greeting people and, meeting the family and having a laugh and building some rapport and, and doing my job. So I think it's been good. It's been a positive all the way around because more people are more conscious of it, putting something in place because a lot of folks got ambushed and got caught off guard, didn't have the policies or finances in place, and it created some hardship. I saw that a lot. Car wash signs and dinner wines and GoFundMe's rampant, and people are starting to find that GoFundMe is kind of slowed down.
And they'd rather have a policy that they can just go to a company and say, this person passed, I have a policy, how soon, what do you need to forward me the money for this person's life?
All they're gonna do is call the insurance company, make sure there's no claims, there's nothing pending, there's not being contested. It's past that 2-year contestability. It's pretty much guaranteed money. Your job is to just simply get a death certificate and provide documentation to the company, and they'll typically cut a check in 24 to 48 hours.
That's it. Well, in wrapping this up, let's say what would be the thoughts that you'd like to give to gentlemen that maybe have been reneging or thinking about it, they're teetering on the edge, that might help them to make a solid decision based on finance and economics? What kind of programs can we think of?
Well, I don't have a program, but I have a parting shot. I would just simply say, if your family matters to you, get a policy to leave them something and don't leave a burden on them. At the very least, because some of the folks are, Christian based and church folks, and the Bible always talks about leaving your children's children an inheritance, which is grandchildren. And I always simplified. I said, hey, if we can't leave anybody anything, can we not leave the burden of death on the family? That's overwhelming, and it's really not fair, because when there's no resources, families really suffer emotionally, psychologically, and financially.
I think that's a wonderful ending, and I think that men will actually stand up and cheer for that if they think about it wholeheartedly, that they will be remembered, no matter what the amount of the money is. It's that the thought that counts, that they were there for them, and this was what they did, the best that they could do. Let's put it that way.
And I always say that, ma'am, all you can do is all you can do. If your money only gets you 10,000 and you want 20, buy the 10,000, because they can use the 10,000.
Well, I think our job in this business now is to show people how they're spending their discretionary funds, how starting at an early age, this is my thinking, for a young man that impregnates his girlfriend, he really has nothing. His age is going to get him a $500,000 policy for probably less than $50 a month. Most people don't even know that. And it would behoove him or his family to take out a little small policy for that kid, and it would be just a small pittance of something that he's building towards and get with the girl. So along the way, as the child grows up, there's some kind of funds, whether he can pay child support. I mean, it would just make him look more mature, like he's coming into manhood, that he wants to do something for his kids.
I know a number of young African-American men, not to throw shade at Black folks, but I know a number of African-American men in their 30s, 35 and under, have children, have nothing in place for themselves. A couple of them are gang members, so they specifically was not interested in that. So I suggested a Roth IRA because it's tax exempt, and start putting some money away for the son. Right. And nobody's done it yet.
Well, it's a start.
Well, they're going out and buying a 5-year-old kid a $120 pair of Jordans.
Exactly, and the jewelry. Yeah, some of
Yeah.
these kids wearing diamond
Well, there's
earrings, wearing
yeah,
diamond
five,
glasses.
6-year-old kid with a real diamond earring and Jordans on. I don't get it.
Well, they don't know any better and they don't understand the policies. And I think that's what our next topic will be. How do we help people to see that this money that you're throwing away could be the money for the legacy to help that kid become more powerful when they become 21. Mr. Ken, I want to thank you for your lecture today. It was wonderful. We hope to bring you back again in
Thank
the
you. It was
near
an honor to
future.
be here.
And thank you, and we will talk with you very soon.
All right. Well, y'all have a good night and thank you.
Thank you.